and the standalone bank level, and rupees 23.2 at the consolidated level. The book value per share at the bank is 580 rupees, and at the consolidated level, 600 rupees. Our strength is derived from our employees who passionately engage with customers to drive the business. It results in revenue per employee and profit per employee getting a lift year on year, anywhere between 8 to 12%. With that, maybe we'll open up and we can answer any questions or provide any clarifications.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Each participant are to be restricted to 2 questions per participant and join the queue again for a follow-up question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Vishwanath Nair from NDTV Profit. Please go ahead.
Good evening, sir. 2 questions. First, on the provisioning side, this floating provision, because you mentioned a benign business environment. So just want to understand what this 11,000 crore is supposed to do. And the second question is on the deposit front again. Last quarter, when you were announcing the numbers, you said that you don't want to be in the pricing game. And that's something that doesn't make sense. You won't get in that business. But then this quarter, we've seen wholesale deposits rise again. What is the outlook there, sir?
Okay. First thing, we'll talk on the provision. The second one, we didn't hear you much because it was echoing, but we'll get to that. First is on the credit, right? It's right that the economy remains very benign, right? And the credit performance of our businesses across all segments, the retail segment, the commercial and rural, or the wholesale segment, continues to remain healthy. You've seen the GNPA at 1.24. I mentioned about the slippages for the year 1.1 against 1.5 prior year, or for the quarter, 28 basis points on slippage. So across all of these parameters, it is improving. It remains to be benign. We have considered that this is an opportune time. When the credit is benign, this is an opportune time to enhance the floating provision. That's the counter-cyclical buffer provisioning is exactly that. When things are good, when things are benign, that is where you get to doing the counter-cyclical buffer. And that's where it gets the balance sheet. When the credit is high and is on the rise, you're already taking a charge. And now when everything is benign, that's the opportunity to do. And we, as you know, that there were certain other things providing offsets, both in the form of certain transaction gains, treasury gains, or in the form of certain tax benefits, providing the opportunity. And this is an opportune time, we felt, and we took that counter-cyclical buffer of the 109 billion that I mentioned about. And it is important to note that these also qualify for Tier 2 capital within the regulatory framework. So that I hope that gives you some clarity in terms of what we are thinking. And exactly this is the time when things are benign that you need the counter-cyclical, and that's the opportunity space that provides that to make it.
Sorry, the second question.
Second question was echoing, so please come back, ask again. Yeah.
Yeah, no, the point that I was trying to make is that last quarter, when you were announcing your deposit numbers, you said you will not do a lot of wholesale if the pricing doesn't make any sense. But then this quarter, we're seeing an uptick on the wholesale deposits front. So what happened? What changed? And what is likely going to happen going ahead?
Okay, yeah. So very good. Thank you for asking that. But, Vishwanath, it's like this. The total proportion of the deposits, the retail bank-driven deposits continues to be 84% of the total. The non-retail is the balance 16%. And it was the same last quarter too, 84 and 16. It remained there. And you know that the March quarter typically is a good, seasonally good quarter for deposits, which we have seen. If you look at our bank, last March we had net deposit accretion of 1.5 trillion. This year we had a net deposit accretion of 1.66 trillion. So we improved on that. And yes, there was, I alluded to 0.4 trillion out of that is the non-retail deposit. but in a proportionate terms, it is the same. So the overall proportion remains the same, 84 and 16.
Going ahead, would you see that going that remaining high again, or is that 16% going to continue for the rest of the financial year, for FY25?
Our approach to deposit gathering has been primarily looking at retail, which is what you want that at the granular level, the branch, and through the engagement, we get those deposits. That's the primary. And the non-retail deposits that we have comes from various relationships, including the cash management relationships, and you want some of these accounts to be with you. That's part of the 16% that we get. One thing which is what we have done over a long time, and that includes this quarter, is that not lead this through a price. So that means we are not looking at price to be an incentive to bring in the deposits. But yes, March did see flows from corporate, which is what normally happens. That's part of the what I explained, that seasonally March is high where you see flows from corporates, which we don't expect that every quarter. And historically, when you look at the deposit accretion in the system, you don't see that the corporate accretion of deposits happens all through in every quarter. March quarter typically happens, but then there is the retail also that accretes. So proportionately, it is very similar, 84%